What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. Now, yesterday we left off at a very particular time within the markets. We were basically saying not to buy in as a conservative trader to most of these major cryptocurrencies until we get confirmation above major resistances. And this is exactly what happened yesterday for Bitcoin, and we've already seen it for Ethereum, but S&P 500, XRP, lots of stuff has happened now. As you guys can see, what we've been waiting on, well, we already knew that there was a popular breakout, a pretty positive breakout within Ethereum. Lots of people are talking about it. You can see we had a beautiful triple bottom right here, 1, 2, here's the third, and we were waiting for neckline to confirm buying in. As you guys can see, we confirmed closing above 1251. We closed at about 1359, and that's when we put a trade in as a conservative trader because it was beautifully above neckline right here in a triple bottom formation. So we bought in, and from here at 1380, we're already up to 1610. So lots of profit we were able to make on BitYard. And it goes beyond just that. We said, oh, well, if we're seeing, Ethereum break out, maybe these other cryptocurrencies look good to break out and we'll buy in. So we looked at XRP. XRP did something similar. We did on our Patreon actually buy into XRP, and we did long it. The reason being is because we had what appeared to be a descending triangle. Clear price floor, clear mega resistance here, and as you guys can tell, we clearly broke through that and confirmed a run to the upside. Now, this is a lot more aggressive, and there's a good chance we're going to swing up to 45 cents here, and I would not recommend, in my opinion, like if I missed out on the opportunity to get in here as an aggressive trade, I wouldn't be buying in here. What I need to wait for now is confirmation above this major resistance level. If we can confirm closing above here, it opens new buy-in opportunities and buy-in windows, and there's a good chance we'll rally up to about 50 cents. So that's exciting. And same thing, we know Ethereum already broke out. Bitcoin was huge. Bitcoin yesterday was a very, very, very key vital moment for Bitcoin's future and potential to see more runs, because we also had what appeared to be some sort of triple bottom, 1, 2, 3. And we were looking at neckline. We thought this was neckline. We didn't, wait to buy in there. What we did was we set up a new support right here at major resistance, because not only did we have retests right here back in June, but we also had wicks retesting this resistance here. So we waited to confirm closing above this level, the neckline, to buy in and long to the upside. And yesterday was the proof that we needed. We were actually seeing lots of uncertainty here. Yesterday, we actually swung all the way back down to retest the top of this resistance here. But we now managed to break through major descending triangle. I mean, look at this major descending channel. This has started from March, end of March. We can literally say April 1st, pretty much. From April 1st, we had all of April, May, June, July, pretty much 4 months now of this kind of stair-stepping pattern here, which is slowly bringing us down. And we finally, that was terrible, we finally broke outside of it, which is huge. We consolidated, which we were hoping wouldn't happen. We hope, when we fell originally to here, that we would just break out of it. It didn't happen. We actually managed to consolidate, which was expected after, because we saw this happen so many times in the past here. And we finally now broken through this major resistance, which is really good news. And because of that, we now actually managed to put a trade in last night because we closed above here. And there's a good chance now that we have a target expected to retest $30,000. Yes, there's going to be some swings. We're going to get close to overbought pretty soon. There's a chance you might see a swing up and then, start to correct down. But I do believe we will be hunting for $30,000 very, very soon. Quite exciting. So, guys, we're going to go more in depth about this later on in today's video. But with that being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's video. So, guys, looking at the S&P 500, this is honestly the most exhilarating and the most exciting to me. Everything kind of falls down to how we react with this level right here. As you guys know, we speak about this almost every day now, and I need to keep reiterating it on the channel here because people are new to the channel. I love when this doesn't want to work out the way I planned it to do. You see, it works here. Notice this top resistance right here. When I jump to the weekly, it messes it all up. It puts this way below here. Like, I did not have this here. And I wish it would correct itself. There it is. You can see why. I don't know why it does that. But now we're back in a good position. You can see for the entirety of the S&P 500, we've pretty much been trading inside this ascending channel here. Well, I don't want to say entirety, but you can see it started back in January of 09. So pretty much the end of 08 into 09 here, which was the last major Great Depression that we had within the housing market and the sub-loan mortgage rates, I believe, the sub-loan mortgage rates. And that what caused this dip to happen here, giving out way too many mortgages to people that can't afford them way too quickly so that brokers can make a profit. And it all backfired. Now there's a lot more regulation around that, but that caused this dump in the market to happen. Here we are now starting to scale up, and we've been pretty clean with it for about 12 years. Lots of consolidation, lots of trending, to the upside here, maybe even 13 years. And we've clearly mapped out a major resistance and a major support. And you can see we kind of just pinball off that until we decided to print, double our, currency in circulation here, double our fiat, doubling the amount in the market. And we literally doubled the size of the rally, which is absolutely insane that we would do that. But here we are finally back down inside this. So what's odd is every single time in the past year that we retested this resistance, we were overbought, extremely overbought, every single time. Literally every single time that we were up to this top resistance, we were extremely overbought for the most part. And now, for the first time ever, we're now retesting this resistance and being extremely oversold. The exact opposite, which is quite ironic here. You can also see that we're having a little bit of issues trying to battle this moving average here. Break through it, I don't know, maybe. Ideally, we would want this market to kind of consolidate out, which would take, another year. And nobody wants to hear that, but allow us to kind of get back on our footing here, no longer be extremely oversold and retest this major resistance here. But there's a good chance that's not going to happen. Given that we are oversold, there's a chance we could be breaking through this, which would be a little weird and a little wonky. Maybe we'd be setting the scale for something new. But economists think there's a good chance we're going to break through this resistance. Notice this has been a very strong resistance here since its formation. You can see, and I believe we had it in the past here, lots of uncertainty retesting this resistance level. Lots and lots and lots. Problematic, finally broke through it. Problematic. You can see here, we come and we retest. Let me just get rid of this, if it lets me, or I'll just delete it. You can see right here, and why this is so important, is we had major supports, major retests, broke through it, major resistance. Here we are again, major resistance. It's like a triple top almost, kind of looks like that, but it could also be some sort of like double bottom maybe, something 1, 2, potential breakout. I don't know, but we're retesting a very vital level, and ideally, I would like it to kind of just trend sideways, but there's a chance that we could be breaking through this, a chance we could get back above here, which would be just a whole new market that we really haven't explored yet. If that does, that really opens up major windows for money to come back into the market and money to float back into things like Bitcoin, Ethereum, XRP. We might have found, truly, I believe we found some sort of bottom. We're starting to get people to come back into these markets because, we're getting used to this drop. Once people are used to drops, and we're there, the way down sucks. But now that we're here, we can kind of regain our footing and start to make trades. And that's what's happening right now. And we're starting to see pretty substantial recoveries. Like, notice from bottom back in June, we're now up 8.4%. That's pretty good if you ask me. And this is, starting to see a run to the upside here. There's a chance we could break through it. This is going to be some wonky territory, but this could also allow things like XRP to swing up to 48 cents, Ethereum to swing up to 2,000, Bitcoin to swing up to $30,000. It's all going to happen at the same time. So you have to spend quite a bit of attention focused on S&P, focused on Bitcoin, Ethereum, XRP. And there's a good chance the S&P is going to rally higher, much higher, when we have interest rates rise and we have, second quarter earnings, which I think already came out, but I could be wrong. I believe they did, though. We're going to have lots of this information come out. We're also going to have, I believe, on July 23rd, in 3 days from now, whether or not we're currently in a recession or not. We could even Google it, like second quarter GDP forecast. You can see it comes out in 3 days, but you can see here the GDP now model estimate for real GDP growth in the second quarter is negative 1.6% on July 19th, down from negative 1.5 on July 15th. So there's a very big chance we are going to be confirmed down. But it's weird because now this is saying the forecast predicts real GDP will grow at an annual 2.3 in the current quarter, down 1.9% from points from the last. I don't know what this means. Like, are we going to be up? We're going to have to wait. I'm trying to look at this. Quarter 2, previous quarter 3, quarter 4. I'm not so sure, but it's saying it's going to be higher. I wish it would show previous. I don't know. But we're in a very interesting predicament because the last one was down about 0.9%, I believe, something like that, 0.1%. So it's a lot of interesting stuff. We're trying to figure this out. We'll get the answer very soon. First quarter was down. I don't know what second quarter is going to be. It's quite interesting. Down 1. The GDP Now model estimates that the real GDP growth in the second quarter is negative 1.6, down from negative 1.5 on July 15th. At this morning's housing, valuation is lower. I don't know. It's going to be weird, but there's a good chance it'll be lower, and that will confirm a bear market. A recession. So we'll see. But otherwise, that's pretty much going to wrap up today's video. Definitely make sure to smash the like button, turn on post notifications, subscribe, and I'll see you in tomorrow's episode. Peace.